Zero to Crypto here. Welcome back to another episode. This video is not financial advice. Instead, is to track my personal journey. Thank you for joining me. Good morning and welcome back to another episode. Zero to Crypto here. If this is your first time, hello. Thank you for joining us. Hit that subscribe at some point if you do find this information helpful. I really would appreciate that. And want to let you know I have a little bit of a longer video today. I will try to put some timestamps in the video description to kind of help you guys navigate through the video. I'll have a special word from Charles Hoskinson, and you definitely want to stick around to hear that. We will be going through, and I just want to tell you, I was going to say we'll be going through quickly some other things, and then we'll get right into that video. But I just wanted to also tell you, sorry, flipping forward and backwards here. When I entered the crypto market, we were at $2.7 trillion. And right now we're at 1.8 trillion. So we have seen a decrease over the past 9 months of about $1 trillion. Now, a lot of that is geopolitical, worldwide events, also, things that are out of our control right now. But that doesn't mean that the money's gone. It just, money leaves and goes into other sectors and other markets. These market movers know where to put the money and how to make the money. Us retail investors, a lot of times we find out late to the game, and we kind of are dealing with the aftermath. So again, the reason why I bring this up is that's why it's very important to do your due diligence in the crypto when picking the asset you're going to invest in and knowing how it does move. Therefore, you won't be surprised by some of these dips, and you'll hold on for the long term and not be, tempted to sell during these market dips. Bitcoin holding at 39,000. And also today, what I want to do? I want to go with the 30 days because I just want to give you guys an idea of where we're at on a 30-day. And that's kind of important to me. So Bitcoin, 39,100, we're down 11%. The last 30 days. Ethereum 28,000, down about 7% in the last 30 days. Also BNB down 4% at 396. Solana 97, basically $98, down just a couple percent in the last 30 days. XRP, wow, 66 cents. This has dropped significantly. And the last week or so, actually we were up to about 85 cents. So I think there were some rulings on some of the SEC lawsuit or something. There is an ongoing situation with XRP. You can do a little bit of research in that. However, when you have these lows, it's a perfect time to get in there. Just look at XRP, and I'll just go ahead and show you here on the 3-month. You can see, where we're at here 3 months ago, and look at all this action, this swing trading going on over the last 3 months. So when you look at the last 3 months, it is relatively a pretty good low to enter. And if you look at the year, even 54 cents here, that was last year in July, June. So getting in at this price with XRP, if you're a hodler and you really believe in the project long term, I'd look at it. I'm not going to get in it right now for other reasons. But anyway, Terra Luna, $91. It's up just 1.5% on the last 30 days. And Cardano, 86 cents, down 23% in the last 30 days. Don't like seeing that, but it's just the way it rolls. Avalanche, 69.96, also down about 20%. And the reason why I go with the 30 days is these, you can look at these times as these dips. You can run with the fear, or you can run with the buying opportunities. Now, I will tell you, overall market consensus, it's torn 50-50 if we're going to go like realistically up or down, or if we're going into the beginning of a bear market or a bull market. So really, you have to really do some due diligence, and just be very careful. So I want to also remind you guys that I'm not biased here, but Cardano is one of the worst performing cryptos cryptos in terms of profit, I am heavily invested in Cardano. And I don't hate or dislike saying this. You know, timing is everything. So I am I'm at $1.89. So my average is, you know, relatively high compared to the price today. But when you look at long term where the project is going, I'm a long-term hodler, so I never put in more than I don't want to say willing to lose, because you don't lose 100% unless you're investing in total risky assets. But you know, I didn't put in any money that I was going to be needing anytime soon, so therefore I can wait it out, and that's a huge that's a huge benefit when you're investing. If you can't put money in that you're not going to need, then that poses a big problem later. If you've tried to hold on and you can't hold on any longer, you need that money, you got to sell at a loss. So I want to read this right here to you. Right here, holders making money at current price, 13% making money, 82% not. So, you know, I would like to remind you guys, it's not all blue skies, roses, and sunshine. You know, crypto is, it's not a game for everyone. It's not an investment for everyone. You really do have to look at the long-term vision for the crypto. And one of the biggest reasons why I'm not concerned and why I sleep at night is I know the project, Cardano project. I urge you to go to cardano.org and look at the use cases, look at the projects. But I want to show you this video. And this is originally what got me interested in wanting to invest long-term into Cardano. And this is what won me over this video particularly when I first saw it. And I want to show it to you guys, then I'm going to end the video after that. Thanks, guys.
When I entered the cryptocurrency space and I really started thinking deeply about what was the point, what's the overall purpose of building cryptocurrencies or deploying these systems where you don't intrinsically trust people and you're trying to kill centralization, it wasn't about, can we just create a competing money to the US dollar or to the euro, or can we kill all the banks and somehow create some way of doing lending that's better? I mean, these are interesting things and they're intriguing academic concepts, and certainly competition in monetary policy is an interesting thing. But the reality is that whether you like the system or dislike the system the Western world has, there's a lot of people who live in very bad systems. About 3 billion people are unbanked, and as a consequence of not having good identity infrastructure, good financial infrastructure, they don't have the ability to climb out of poverty without a considerable amount of assistance or leaving their country, which creates brain drain. So the very first thing I thought about when I entered the cryptocurrency space was, how could we use this technology to actually resolve the problems of the developing world? And not resolve them in showing up and saying, oh, well, I know everything, I know all your problems, I'm going to tell you what to do, and just listen to my brilliance, and somehow this will solve everything. That's been tried for a long time, and it's a miserable failure. Instead, it's about saying, this technology has no owner. This technology has no central point of failure. This technology has no one in control. Instead, it's infrastructure, global infrastructure, that no matter how rich you are or how poor you are, you use the same infrastructure. It's almost like the subways of New York. You have one of the richest men in the world, Bloomberg, on it, and then you have homeless people on it. They're using the same infrastructure. So this is basically the same concept when you're talking about cryptocurrencies. So about 4 years ago, I gave a TED Talk in Bermuda, and the goal of the talk was to try to elaborate why I felt cryptocurrencies were interesting. They're not just Rube Goldberg machines for ICOs. They're not just these things that are fun to go talk about at expensive conferences in New York. These are things that if you have the patience, if you have the desire and also the appetite for failure and experimentation, and you're willing to have a bit of courage and go into the developing world within an arc of time, several years, 3 years, 5 years, a decade, you can actually teach people how to use this technology and make it theirs. And then they can solve all of their local problems. So that was the hypothesis that I had 4 years ago. And when we formed IOHK, Jeremy and I always wanted to do something within the developing world, but it took us several years to build up enough momentum and revenue and build up enough infrastructure within our own company, and also build Cardano to a point where we felt that we actually had a fighting chance to be able to enter these markets correctly. So we started with Argentina, and then we moved on to Barbados, and now we're one of the most populous countries in Africa, Ethiopia, and this is our entry point into the African continent. So why Ethiopia? What makes Ethiopia special? Well, Ethiopia is a very ancient country, and it has a lot of amazing connections throughout its geopolitical pole. It has the African Union's here, UNICEF is here. It's a country that has wonderful trading relationships. It's a country that has a very continental view. There are some countries that tend to be a bit isolated, and there's other countries that tend to take a leadership role into the destiny of the land they're in. So if you wish to do business in Africa, places like South Africa and places like Ethiopia are places you have to visit, places that you have to have a pull in. So we decided that this would make sense to start and build a beachhead and build up a great network of entrepreneurs, developers, and projects that we feel could really showcase the value proposition of our technology. Another reason why we chose Ethiopia is Ethiopia still has a lot of impoverished people. About a quarter of the country lives in extreme poverty or near extreme poverty. There's still significant infrastructure problems. There's still a very sizable proportion of people who are unbanked. And it's a big humanitarian crisis in a certain respect. Ethiopia is also suffering from the problems of extreme growth. In just a century, they've gone from about 10 million people to 100 million people. And as a consequence, about 90% of the biodiversity that was here in the turn of the 19th and 20th century has been lost. This is a country that literally has the lion as its national symbol, and there's only 1,000 of them left in the wild, about 1,000 giraffes left in the wild. So it's a country that's having a bit of a difficulty dealing with sustainable growth. It's a country that's having a bit of difficulty dealing with the consequences of globalism. And so we felt it would be a tremendously good target to be able to implement our technology. So how do we do that? Well, the first step is you assume nothing. You assume no knowledge. You start with the beginner's mind. And you just say, let's find some good people to work with. So you partner with the university, with the ministries of science and technology, and then you say, give me your best students. Then I can take my best people from Cambridge and Oxford and from great universities like University of Edinburgh and say, go teach these people how our technology works. Teach them how to program in Haskell. Teach them how blockchain technology works and so forth. And then once they have the knowledge, then you can sit down and say, what are the problems that you face on a daily basis? For example, Ethiopia is one of the largest coffee producers in the world, and the agri-tech business here is really what sustains the country. And despite the fact that coffee is a huge cash crop for the country, it's a really dreary state of affairs. Most farms are a hectare or so in length. There's about 1.5 million people who grow coffee, and they get inconsistent quality. There's all kinds of problems in the supply chain. There's unsustainable practices in coffee growing. For example, a lot of trees that should be stumped aren't. And as a consequence, people just barely get by. And if there's any bad growing season, it causes a huge amount of problems. So it'd be wonderful to be able to say, boy, could we insert a blockchain for supply chain management? Can we create better systems to create cooperatives of farmers and allow them to get proper identities so they can use that for credit, and they can use that for insurance, and also for prepayments to stump trees, for example. These small changes, in some cases, could increase yields by 200 to 300%, and also allow them to get more consistent, less volatile pricing on coffee. Most people say, well, that's a little bit more money, but for people here, that's the difference between starvation and the difference between not only being able to survive, but also thrive and be able, generation by generation, to get better educated and to build actual wealth and climb out of poverty. So we feel that the tech we build has the best shot of being able to be part of that story. There's certainly other technology like IoT and AI and a lot of embedded devices, and you have to figure out how to solve intermittency issues in both the power grid as well as the internet connections. And that's certainly fun and exciting to think about, and it's something we're definitely going to participate in. But the core of all of it is trust and coordination. How do we deal with the fact that people have incentives that sometimes are contrary to each other? The buyer always tries to defraud the seller always tries to defraud the buyer, and business relationships are predatory or on the short term. If you can build better structures, better governance that does not require centralized coordination, you resolve those issues, you build stronger, better marketplaces, and as a consequence, the people overall are in a better position, in a more resilient position. Furthermore, once you have this infrastructure in place, you can have more evolved conversations about conservation and sustainability and ecological sustainability, so that we don't have to continue to destroy our environment. We don't have to continue to watch species after species go extinct. The great part is also that if it works here, it'll work pretty much everywhere else in Africa and pretty much everywhere else in the world. So it's a tremendous challenge. It's a social problem. It's a game theoretic problem. It's a market problem. It's a technological problem. Getting money that lives in the internet, that's always on, always digital, to work on a cell phone that doesn't always have an internet connection, that's challenging. And it's certainly going to tax our researchers and our engineers. But at the end of the day, it's not what you do for people who have the most that will define you, but it's what you do for the people who have the least. That's kind of our mantra and how we feel we should approach business. So we're incredibly excited to be here in Ethiopia. It's a very long arc. It's going to take years for us to see real fruits of the labors in the jurisdiction. It's not the only country we're going to. Soon we'll head to Rwanda and other places, but it's one that's very exciting, and we think we can, over a long arc of time, have the biggest impact in places like Ethiopia, and especially in the agri-tech business and so forth.
Well, guys, like I said, this, I'm getting goosebumps even now. This moves me. And, you know, again, it's not what you do for the people who have the most. It's what you do for the people who have the least.